Let me follow up on that further. Before the Fed, there were more recessions and they were more severe recessions. There were more financial panics and they were more severe financial panics. Is that a price you're willing to pay going back to that to rein in the Fed now?
Well, I don't want to pay that price. Even if you argue the case that we had those before, we still could prevent them because they were artificial. But if they do happen, yes, you do. You pay the price of 1 year of a bad recession like we did in 1921 and 1920. And that was the last example of us having a hands-off approach. And the debt was liquidated. The GDP went down rapidly and people went back to work. But you got rid of the bad debt and the bad investment. Today, our whole goal is to perpetuate the mistakes. So what have we been doing up here? We're trying to encourage building of houses. We're trying to keep housing prices up. And we buy the bad debt. We don't allow the people, we don't allow the liquidation of the debt. So yes, after somebody else messes up the economy, the free market is demanding that we liquidate and go back to a period of time where you can have economic growth again. But I think you're touching on the important points. Politically, though, it looks like it's painful. If they did exactly what I wanted in 07, 07 and 08 might have been really, really bad, but we would probably be having 3% unemployment right now, and we would be back in a growth period. Japan made the same mistakes. We did in the 1930s, so we didn't do it like the 1920s, 1921, 22. But politically, we are so conditioned that if there is a problem, we have to take care of it. It's exactly like a drug addiction. The doctor who wants to get you off drugs, he's a bad guy if he won't give you your drugs. If you get the drug, you feel better. But eventually the addict dies, and that's what my concern is. I want them to take their medicine. I don't want the patient to die. I don't want our economy to die. I don't want the dollar to die, and that's what they're working on, because one of the strongest reasons for inflating comes from the Congress. As bad as the Fed is, the Fed accommodates the Congress. They literally, provide the funds. So if the Fed couldn't monetize our debt, interest rates would go up, and the Congress would say, "Hey, we can't get away with this," and all that does is create greater distortions and a larger bubble.
So, Congressman, are you confident that if you did rein in the Federal Reserve, then your colleagues in Congress would actually replace it with something better? Isn't there a danger that Congress itself could meddle in monetary policy, and that could be even more damaging?
Yes, I think that is a concern, but that's not my argument. I don't want Congress to manage monetary policy. I want the market to do it. I want market interest rates, and I want the market to determine the money supply. But you do raise an important question, because something much worse could come out of this, and that is an international one-world fiat currency. People talk about the IMF coming up with the STRs or whatnot, another currency. And that, to me, would be a lot worse than the dollar reserve standard, because it would be mandatory around the world. And also, though, it will provide an incentive for some nations, maybe in the Far East, to come up with a currency backed by gold, and people will want to go in that direction and reject the dollar. And we do know that gold has left West and has moved to East. So the central banks of the Far East have much, more accumulation of gold. The gold supplies in our central banks in the West have diminished. So something like that could happen. But you're right, it could be dangerous. But the danger of the Congress taking over, I recognize that. I don't want that. I don't want, because some of my allies that don't like the Fed, we call them the greenbackers. They say Congress should print the money, then we don't have to pay interest to the Federal Reserve. That is not the solution, because there's no authority. Matter of fact, there's an explicit prohibition against printing money, whether it's the Fed or the Congress.
We have about 10 minutes left in our conversation.
Congressman, you've made auditing the Fed kind of a central plank of your movement, and I wanted to talk about that for a minute. A lot of people hear the word audit and they don't quite know what it means. In this case, the Federal Reserve's books are actually audited by an outside accounting firm, a private accounting firm. And what you're talking about is more of a policy audit, to have congressional auditors go in and be able to look at the Fed's policy decisions. The Fed, of course, fears that this will lead to congressional and political meddling in its decisions about interest rates, which can cause all sorts of problems with the economy. What do you think about this idea of auditing creating a problem for the Federal Reserve? And interest rates are watched very closely by markets and the risk of volatility there?
Well, yes, and that was my point earlier. They do look at interest rates, and the Fed is responsible for the interest rates, and that's where our real problem is. So unless we get a handle on that, I don't see how we can solve our problems at all.
Do you think that the movement to audit the Fed is actually going to lead to something that you want, which is ultimately to end the Fed? How are those two ideas connected?
Well, it is. It's to expose them. I think it could lead to allowing illegal tender competition, and allow people to get out of dollars domestically. Internationalists can do that all the time. If you're an international banker or businessman, you have to accommodate yourself and protect yourself and be in the futures market in order to protect your currency or lack of currency. So we think you should be able to do this domestically. So exposure of the Fed is going to help us in that effort. And if the chaos, or matter of fact, when the chaos comes from a sharp attack on the dollar, there will be a growing consensus, which has already started, that we have to have monetary reform. And that will be the big question. And we should look toward the 1870s on how we did it before. But the reason why that is so difficult is the American people would have to change their attitude about what the role of government ought to be. See, I think that's the most important question. If we as a people believe that we should be the policemen of the world and have perpetual war, be in 130 countries and 740 bases, and then have a runaway welfare state where nobody gets anything cut, no, you can't really attack the monetary system. So it's that attitude which creates the problem, and the Fed is the financier. If you stop the financier, you would put you could put a halt to that. But ultimately, the American people should accept the idea that our government was created to protect our liberties. It wasn't there to regulate our lives and regulate our economy and police the world.
We have about 7 minutes left. Quick question, really. Earlier, you referred to the twins' dual responsibilities of employment and also inflation. I'm wondering whether or not you anticipate that this Congress will actually rewrite the law that sets that twin mandate.
Oh, they could, and I think it's a very important subject. I think when time permits, I want to have that discussed in the committee because it raises questions more than it gives answers. People know that, well, they're saying the Fed had the responsibility and they totally failed, so we take this power away, which I would probably support, but I think it's incidental to the real problem. And because the real problem of unemployment is the business cycle. Unless you address that, you can't deal with the unemployment. So, but I think it's a good discussion, but it doesn't provide the answer. If tomorrow we eliminated this authority to look at unemployment, I mean, what would the Fed be restrained from doing? They could still operate under these emergency powers and bailing out and injecting credit and be the lender of last resort, and they'll continue. So I don't think it would change a whole lot, but I think it's a real interesting discussion.
Robin?
Congressman, which do you think creates the greater danger of a sharp attack on the dollar and inflation? The Fed's monetary policy or the fiscal deficits that Congress keeps running?
I don't see how you can separate them because the fiscal irresponsibility is an incentive to have the Fed, monetize the debt. But when they overstep their bounds and inject $1.2 trillion and another $600 billion, then they are really overstepping their bounds. And I think it will be, if they continue to do that, let's say the $600 billion soon be recognized that it didn't do any good and did things in an opposite manner, and interest rates goes up and unemployment rates goes up. If Bernanke sticks to his guns, he's going to have to come back and say QE3, another $1 trillion. If that's the course of events, then it will be the monetary policy which domineers, and that'll be secondary to the fiscal policy. But fiscal policy and the irresponsibility of the Congress is a big problem as well.
Congressman, the Fed is often accused of being too close to banks and obviously being the central bank. That's partly by design. I wanted to ask you, though, about something that Spencer Backus, the incoming chairman of the Financial Services Committee and someone you'll be working closely with, said recently in an interview with the Birmingham paper. He said, in Washington, the view is that the banks are to be regulated, and my view is that Washington and the regulators are there to serve the banks. He later clarified that to say that he was worried about micromanaging. But what do you think of a comment like that?
Well, you know, I didn't hear the full comment. I think I overheard him talking to somebody, and he said that he was completely taken out of context. I don't think any politician would stick his neck out and say, well, I'm here to take care of the banks, especially under these circumstances, because I don't know the details of that, because he was a strong supporter, one of the early supporters for auditing the Fed. And, you know, if he explained himself, I bet we'd come to a pretty close agreement, because I think one of our problems has been over-regulations, not under-regulations. I want the markets to regulate. I want the bankruptcies to occur, and you regulate in the marketplace a lot differently. But to allow the Fed to create the problems and then say, oh, well, the Congress can compensate by regulations. But the housing bubble came from too much credit, but it came up with all the mandates from the Congress saying you must make some of these loans. So those kind of regulations are very bad when you're telling under these circumstances that banks have to make certain loans that are risky.
So you think regulators really should be pulling back more than they have?
I don't think we need regulators. We need law and order. We need people to fulfill their contracts. We need the government to fulfill their contracts that have honest money, so that you don't have to anticipate the devaluation of your currency. We need honest interest rates. But the market is a great regulator, and we've lost understanding and confidence that the market is probably a much stricter regulator than the special interest regulators who's, you know, we regulate, but guess who got regulated to their advantage? It's been the big companies. So no, the regulators get, you know, the big companies get control of the regulators. So the marketplace, it doesn't happen that way. The government's role then is to say, you fulfill your promises. If you said you're going to do something, if you're going bankrupt, you declare bankruptcy and nobody's going to bail you out. There will not be any moral hazard, because when you regulate and guarantee the lender of last resort, it creates a moral hazard and causes the banks to make a lot of mistakes.
Congressman, we're just about out of time. You've had the opportunity to see many men at the helm of the Fed. I'm wondering how you think the current chairman is doing in executing his responsibilities.
Excuse me, the current what?
Chairman, Ben Bernanke.
Oh. Well, you know, I get asked that a lot, and I think people look for me to be, you know, very, very critical. I'm very, very critical of the policy. You know, I think it's a lousy policy, but it's a system that I'm most critical about. And I was critical of Greenspan the same way, because they adhere to a philosophy that I consider totally incorrect. So there I'm very, very strong. But whether he was a worse manager than Greenspan, or compare, or if you fire Greenspan and put another person in that has a philosophy of that blends in with Keynesianism and inflationism and fiat money, yeah, well, that won't make a difference. You have to analyze the whole philosophy of the monetary system, and you have to reject this system that is literally counterfeit and artificial and inflationary. This is the problem, rather than Bernanke himself.
We have 30 seconds for a final question. Either of you?
Go ahead, Bob.
I'm okay.
If not, we'll let that go as our final with you, Mr. Paul. Thank you, Dr. Paul, very much for being with us on this busy week in Washington, D.C.
Thank you very much for having me.